Hello, it's 9/10/2021, and my account is red today mostly because my position in Western Digital. I've got long-term leap options leveraged, and it's down maybe 6 or 7 points from what I bought it at. I'm not too worried about it. It's a good buy the dip opportunity, but this is not what I want to talk about. Today, I want to talk about Coinbase and how this is the perfect time to buy it. It's trading at 247.75. It is down 3.16% today and down 10% for the week. And over the last month, down 13%. And over the last 3 months, it's up 10%. But why I want to talk about Coinbase is I have a small position. I plan my next paycheck to put more money into it. What I like about Coinbase is here you can see it's 24.95 price to earnings ratio. And with growth stocks, you don't typically see earnings. You don't typically see net income. They're paying a lot of money to acquire new customers. And with Coinbase, that's not the case. They've got the tremendous growth of a growth stock, and then they got a pretty significant price to earnings ratio rivaling established stock, established stock in the fintech business, like say a PayPal. They got a better PE ratio than PayPal right now. That's been around for a long time. They're at 52.74 billion market cap. As we can see, the news, they're in the 100 most popular stocks on Robinhood. They're saying 8 billion in net income, which would be ridiculous to give them like a PE ratio of like 7 if that were the true. They're saying it's a buy the dip opportunity, which is what I'm saying as well. Research report on Morningstar. Morningstar is always kind of behind the growth stocks, so they put a fair value of 201. I do not agree with that, and I'm not even going to go in to read the report. They're probably skeptical of their earnings, but if we could see the first quarter, they earned about 2.20, and they jumped to 6.420 EPS per share, shattering the expectations of around 2. I mean, this is big earnings jumps right here. I know they probably don't expect it to last for the remainder of the year, but let's just say, for argument's sake, they average 5 earnings per share per quarter over the next year. That's 20 at 247. That's like a 12 PE ratio going forward, just based on how they've been shattering the expectations of the earnings. And so this has tremendous potential to grow. And like I said, they're actually making money. And another crazy thing about this is their initial requirement to use margin is 50%, so you have double the buying power on Robinhood, and the maintenance requirement is 25%. These are the lowest Robinhood allows, so as long as they stay within 75% of the range which you bought it at, you won't have a margin call, so you can potentially get your position double what you have in Robinhood by using margin. So I have a PowerPoint on this I would like to go through, and some of the key points I prepared from this. So here we have, tip ranks, where these 15 Wall Street analysts gave their 12-month price target. Average of 350.17, meaning it has a 41% upside. Low target 220, since it's at 247. It's kind of at the low target right now. And a high target of 500, meaning it's essentially going to double. If we look at the 6-month chart, we have strong support around 210-ish. It hit it 1, 2, 3 times, and it's always bounced back from this 210 level over the last 3 months. You see it kind of trades sideways for a while, had an impulse up, hit resistance around 295, came back down, hit another resistance around 280, and now it's down on bad news. The SEC is planning to sue Coinbase over the interest loaning program, but it's time to take advantage of these relatively low price for Coinbase and try to get on this dip before it makes its next run. Cathie Woods has invested over $1 billion Should we follow her lead? This article basically says she put $1.4 billion or 4.63 million shares of Coinbase. She owns 2% of Coinbase. For ARK funds, she has been phenomenal at being ahead of the technology curve, making 100% returns on her ETF. So this is one of her main horses. So I'm not betting against Cathie Woods anytime soon. So she's been pretty good at leading us in the right direction for these growth stocks. So that's a keynote to take ahead of. And here, Coinbase says the SEC has threatened to sue over plan to pay interest. Basically, it's just like BlockFi. So if you have $10,000 of crypto, you could potentially take a loan against it for like $5,000, pay interest on it. Or if you own the crypto and you don't want to take a loan against it, you just want it to pay interest, they'll probably pay you like 4 or 5% or whatever they're paying. Gemini and BlockFi already do this. They let you loan against your crypto. So if you have home repairs and you don't want to sell your crypto, you want to keep it, you got collateral there. Or if you want to earn interest against it. So why they're going after Coinbase, I do not know. But that provided a buy the dip opportunity, so hopefully everybody can take advantage of that and get into the position for a lower price. So I pulled this off of Finviz. This data is probably a little bit old. They're always a little bit behind. Say 50.45 billion market cap, as we saw before. PE ratio of 31.13. Forward PE ratio 49.9. That, like I said, that number is a little bit behind, but a price to earnings growth of 0.47 based on this data that's behind. We like to see that under 1, and 1 is kind of what the stock gravitates towards as it grows. So basically it's saying that there's a potential for it to double based on that PEG ratio. Price to sale at 10. You like growth stocks 10 and under. That means they're pretty undervalued. Value stocks, you like to see a better ratio, but price to sales ratio on growth stocks, that's really good. You can see the growth rate, earnings per share this year at 500%. They're predicting a down year next year, but over the next 5 years, 66.30% quarter over quarter, 1,000% growth, almost 5% growth on the earnings per share growth. What I like to point out is these profit margins of 36.40%. That is tremendous. That is a high profit margin. What they're doing, price target 384. As you can see, they've got pretty solid financials, especially for a growth stock. I pulled this quarter over quarter financial income statement from bar chart, but you see 31 million to 32 million, no data. 771 million, 1.6 billion. So you can see just the sales growing from 190 million sales, 186 million sales to 1.8 billion to 2.2 billion in sales, and the net income derived from those sales as well. You see the EBITDA growing as well. Last quarter it didn't grow as much. I'm not going to jump into financials to figure out why. I'm already sold on this stock. His free cash flow is just impressive. 467 million to 634 million to 3.3 billion to 3.4 billion to 7.39 billion. Market cap of 52 billion. We're looking at 7 to 8. Free cash flow to market cap ratio. That's quite a great value if they could keep this free cash moving forward, and if they can make these sales. I don't expect it to stay at that, but I expect it to be over 3.4 billion, somewhere between that next quarter. But yeah, that's still pretty good. At 50 billion, 3 billion, that's like less than 20, which is really good for a growth stock that's only been available for 2 quarters. Their current assets at 5.13 billion versus their current liabilities at 4.24 billion. Their quick ratio, they could pay off all their debt if they need to. So that's pretty much the numbers. If we go and we check what crypto's trading at right now, it's down. This kind of reason's crashing. We see Bitcoin at 45,449, down 8.62%, and Ethereum at 3,291.16, down 16.0%. So, this is providing a pretty good buy the dip opportunity. And it's not like holding crypto. They're always going to make money whether the crypto's going up or down. They're not traders, so it's a little bit safer bet than crypto, I say itself. they're always going to have solid earnings. They do have competition. They do have other things popping up, lawsuits, cybersecurity may be an issue in the future. But I think overall, they're risk putting a little bit of money in and seeing if they could grow at the rate they say they are. Anybody's thoughts, if you're buying it, if you're selling it, or if you don't care, just leave a comment below and let me know. And until next time, bye.